Joining us now to discuss is Ross Gerber, CEO of wealth and investment management firm Gerber Kawasaki. Hello there, Ross. Thanks for joining us. So,
Hey.
just, 1 million Bitcoin, is that plausible?
Well, Kathy's made some pretty big number calls in the past, and some of them have been right. I don't really look at Bitcoin that way, in the sense of our goal isn't necessarily to see how much we can get Bitcoin to appreciate, as much as building utility around cryptocurrencies so that they don't depreciate. And I think we oftentimes get distracted when Bitcoin's rallying. That utility needs to continue to be built into the crypto system, whether it be with altcoins like Doge or Ethereum or whatever. And I think that's the most important thing. The ecosystem becomes usable for companies, institutions, and individuals in a way that will institutionalize crypto assets as a way of life. And the more that happens, the more value will be gained by Bitcoin. But I think the thought process around price is more detrimental to Bitcoin than necessary.
All right, fair enough. We've got the Fed meeting going on, but we do have markets reacting to Fed Chair Jerome Powell's news conference. We see the Dow is turning negative. Bitcoin is off from its previous higher recovery this morning. How do you interpret the price reaction?
Well, I mean, we're seeing rates just kind of shoot up. Right now, I think it just hit 1.84, almost 1.85. So that's going to put pressure on Bitcoin and equities, because Powell actually was sort of like more dovish, meaning that we'll have more growth and probably a less aggressive tightening cycle than I think people were perceiving. And then, the 10-year rate kind of shoots up, because it's like, oh, okay, we might actually not kill the economy by raising rates. And so I have a lot of faith in Powell, and I think the right things need to be happening right now, and rates are going higher. I don't see that as a bad thing.
It's interesting you say that his speech is dovish. So is that surprising to you? And what did you get out of it?
Well, I think he really understands that data changes very rapidly, especially with coronavirus and the uncertainties that have been created in the supply chain from the various factors that are very sort of unnatural behaviors. And so he has to maintain the flexibility he has to make adjustments to what he may perceive as risks to growth or risks because of inflation. And so it seems right now the higher risk is towards inflation, and that's why rates are going higher. But I think he was pretty, how would I say, unclear about what he was going to do with the balance sheet and when. And so I think that's the dovish part of the speech. We know he's going to raise in March. We know that tapering is happened. So I think the real question is the speed of the rate increases and the getting rid of the balance sheet. But the bottom line is I have faith that he's going to do this right. What he said that I think most people oftentimes miss is that his goal is to have another long expansion with lower inflation like what we had under Obama for a very long time. And so if that's his goal, this adjustment cycle is presenting a great opportunity for long-term investors.
All right. So what was behind this past weekend sell-off then? Was it global market jitters, concerns over more hawkish central banks? Have the sellers stopped selling?
Well, no. I mean, I think the market was very expensive, and you had a lot of froth, and you have things like NFTs and speculation, all over the place, and it's not healthy for the economy or people to be gambling all their money all the time. And that's a byproduct of zero rates and printing money and sort of this like unlimited zero cost money. And so now with the Fed in action, putting pressure on risk assets like Bitcoin, it really actually just creates a more honest market and a less speculative market, which is actually what we prefer. I think even though a lot of people might not like losing money on the short term, which I fully understand, that's part of the process. Okay, like markets don't just go straight up. There's lots of bumps in the road. And I think a lot of newer investors are learning the realities of investing. Is what we do is very hard as professional investors, and it's going to be a difficult year. There's no
Right.
spin on it.
So in another story we're watching right now, the IMF is urging El Salvador to stop using Bitcoin as legal tender. They're in the middle of negotiating a 1.3 billion loan agreement. There are a lot of geopolitical, socioeconomic dynamics at play here. How do you see things shaking out?
Well, that's a good one. El Salvador has a lot of unique issues that I think are irrelevant of the greater idea of having Bitcoin be your currency. You know, for the El Salvadorian people, there's nothing better for them than having Bitcoin instead of the El Salvadorian money, which probably has no value. And I think most countries will be better served having Bitcoin as their currency than their current currencies. But they do this so that they can print money and do whatever they want to do. And so I think, you know, countries around the world, you know, and including the IMF, have a
well, they have a dollarized
incentive.
Economy, so
Yeah, and they have a large incentive to continue that system of inflationary money printing to support government spending and all the initiatives that they want to do that they can't afford. So there is risk for countries moving to Bitcoin because they have to be responsible and not print money if they go to Bitcoin. And it presents a lot of the same problems that when countries are on the gold standard that they used to have, including the United States. So although I like the idea of countries, you know, going to Bitcoin, it doesn't necessarily serve their governments that well if they're not responsible. And I think a country like El Salvador has never proven to be that responsible with money. So I think
well, they're relying on the dollar, so they can't print U.S. dollars and you know, control.
Yeah, but that's, you know, their economy sort of works. It's so messy, you know.
Yeah. Well, I guess the IMF's point is that this makes things messier.
But you know, but what I do think is that if I was a person in El Salvador and I was getting paid in Bitcoin, I'd be a lot happier than any other currency, right? And so they've digitized their economy, and I think a lot of countries should consider this as a way to go moving forward. But it will create a responsibility among those nations that would be beneficial, I think, over the long term, but take away a key element of power that these countries have in printing money.